Hello traders, Sid here with another weekly watch list video. Before jumping into this week's stocks, let's take a look at what happened in the stock market and where we are heading. Starting with the Nasdaq has this nice cup formation that we completed on 29th March. And from that point onward, we saw quite a bit selling pressure in the market, and that selling pressure got continued from Wednesday, Thursday till Friday at the end of the day. On Friday, we saw market closed a little bit green and we saw quite a strength over there, but we just need to be careful going into the next week. Probably we might see that selling pressure continues toward the mid of the week, and from that point onward, maybe bulls will get a strength to push the market higher. Considering the Nasdaq, with this formation, with this cup and handle formation, we might get another leg high towards 15,266. This is a major level to break because we got a rejection from that level multiple times. Next one is ES1 or S&P 500 E-mini futures, and here as well we have that similar cup formation, and we have this megaphone action or the handle formation over here. There are two levels to watch for. First one is 4582 or 4590, and beyond that we have this level of 4706, but short-term target will be 4582 or 4590. If we break through that level, then 4600 we need to watch for. Moving on to VIX reached to its low around 1879, and from that point we bounced back and we reached high of 2084, and then we kind of like rejected from that level and coming down again. So it seems bullish for the overall market because VIX has an inverse relationship with Nasdaq and S&P 500 E-mini futures, but we need to keep this range in check because the lowest it can go is 15 or 16, and it might hover over there. That will add some choppiness in the market before breakout and move towards 20. I think market will be bullish next week, but that's not going to happen on Monday. Probably we will see sell-off continues on Monday and Tuesday, and after that bull strength might come back starting from Wednesday going into the Friday. Now the first stock in my watch list is Apple. Now we saw quite a strength in Apple till this Wednesday, and from that point onward we saw quite a sell-off. I thought like we might see another high considering the strength that we had, but we rejected from 179 or close to 180 level, and then we had this sell-off. Now we are in the falling wedge formation. It is quite a bullish. If you guys can take a close look, we have this inverse head and shoulder formation, so we'll do another attempt to break through that 180 level. For that we have this two level of resistance like 175 and 177, so we need to see like how Apple approach to this level to guess its next move. If we get the similar strength over here, we might break through 180 and possibly reach to new high, but that's just a speculation at this point. But I think Apple can go to 177 at least. The next one is AFRM Holdings, and similar to Apple, we have this falling wedge formation over here, but in addition to that we have this nice head and shoulder formation in play, and I think at this point if we might get a slight push towards this 4735. Right over here we might get rejected from this level, coming back down to fill this gap, and that will complete the formation of a head, and when it will reach to this 40 level, can get a bounce back again, and that will complete right shoulder. And from that point onward we need to see whether it can hold this 40 level or break below that. Now the next one is AMD. AMD had quite a sell-off, and the reason behind it was this downgrade from Barclays. So Barclays set the current price to 115 down from 148. Now there are different reasons for this downgrade, and I will pin this article down below in the description. If you guys are interested, you can take a look at it. But at this point we fell below that 115, so we were trading close to 125, and even though the analyst price target was 115, we dropped below that and reach a low of 106, and at this point we are at 108. If you take a look at this chart, we have this clear inverse head and shoulder, which is a bullish formation, I think, for a short term. And at this point we can easily reach to 109, 110, and at that point we will complete this head formation, and from that point onward we might get a pull back a little bit, where we start forming that right shoulder, and then from that point onward we need to see whether it can go beyond this 111 price and reach to 115 and stagnate over there and have a choppy sideways action. But at this point I can clearly see it's in bullish trend with this inverse head and shoulder formation. If we break below 105, then that formation will be invalidated, and that point onward we can see the retest of 100 level. Moving on to Amazon. Now Amazon is a clear, simple and straightforward. It has this falling wedge formation, which is a bullish, and for Amazon I have these two price targets, 3405 and 3322, because we got a rejection from that level multiple times. With market moving higher, we can get another leg high, and as other stocks we have this head and shoulder formation, so we might get another leg high, and from that point onward we have to be very careful, because if market gets a strength, bull strength back, then we might see the continuation of the bull run towards the upside. Otherwise we can, complete that right shoulder and then come back down again. Moving on to Costco is very similar to Amazon, has this head and shoulder formation. Left shoulder is little bit hard to see, but it's there. We have this head formation and we are in the formation of that right shoulder, and if we drop below 570, then that head and shoulder will get invalidated, and at that point we can retest this 567 and 559 level again. But on the upside we can retest 577 and 580. Now the strength that we saw on Walmart, we didn't see that strength in Costco, and I will cover Walmart at the end, but that's it for the Costco. Moving on to Facebook. The Facebook has this nice cup formation, and within that cup formation we have this falling wedge, and overall Facebook looks bullish, so I think we can easily see 227 to 230 move pretty quickly if we couldn't get that move, and if we get rejection from this level, because it adds its key point level and we might get a rejection, then on the downside we have 220 215 level to watch for. The next one is Google. Similar to other big tech stocks, Google has a similar cup formation, completed that on 29th March, got quite a sell-off from that point. In the candle formation, also a falling wedge, bullish sign overall, so I don't think Google will have a difficulty to push towards 2850, or if possible close to 2875. So those are the key levels to watch for when it comes to Google. Let me adjust it a little bit. There you go. Next one is a MasterCard. MasterCard also has this falling wedge formation. The only thing that concerns me is this gap. So right below that 357.80 level we have this huge gap to fill, and at this price point either we can get move towards 367 and from that point 372, but if we get a downward move then we might retest this level of 357, where two things can happen: either it can bounce back or start filling this gap. So both has probability of 50-50 of playing out. So let's see what happens with MasterCard. I will keep an eye on this one because it looks interesting. Next one is a Microsoft. Similar to Google, Amazon, we have this cup formation, nice handle formation, bullish, and with Microsoft we can easily see 310 315 level before pulling back, if we get a pullback towards 305 and 300. Moving on to NVDA is very interesting, considering we have head and shoulder formation inside head and shoulder formation. What I mean by that is, like, if you focus only on this part, then we completed that head and shoulder formation. We broke down through this 271 level, came back down towards 262. At the end of the Friday we closed around 267. Now if you expand this box a little bit more, then we have another head and shoulder where we completed that left shoulder, got a bounce back, reached reach high of 287, came back down to 263, and possibly we are seeing the beginning of the right shoulder formation, and that formation might complete when it reached to 271, get rejection from that level, and then will come back down to retest this 256 level. So I'm very keen to see how it plays out, but the probability of it completing that right shoulder is very high. Moving on to Tesla. With Tesla, we had quite a bull strength, consolidation, gap up, then we reached to recent all-time high towards 1115, and from that point onward we just had quite a choppy move, sideways move, and within this cup formation we have this falling wedge, and this makes sense. Inverse cup, falling wedge, bullish sign, another leg high, probably towards towards close to 1100, and that will complete its handle formation of that cup, and then we will get a sell off or pullback, and that pullback will be quite drastic because we have this head and shoulder formation in play as well, along with this inverse cup and the falling wedge formation. So that makes complete sense. We will complete this cup formation, come back down, we'll complete that right shoulder and fill this gap. If we can hold this level with Tesla around like 1000 level, then we might get a bounce back. Otherwise, if sell-off continues, then we might reach to 934 or 950 level pretty quickly. The next one is Walmart. Now Walmart has had quite a strength, and to be honest, I was looking for a news or to see why exactly it is pushing higher, but I guess it is moving along with the market, and I couldn't find any particular catalyst. But Walmart is in this beautiful trending channel. We reached to that resistance. Also, we have this head, left shoulder, head, and right shoulder in the play, so we need to watch out for that one. For the upside, I guess we can see a push towards 152 at the max, then pull back towards 150, 148 and 147. At that point it will complete that head and possibly start forming right shoulder, and if we broke below 147, then I guess we have filled this gap. So that's it for this week's watch list, guys. I will upload a detailed PDF version of this watch list over my Patreon. So if you are interested, you can join my Patreon only for $1 and download that PDF watch list. Thank you for watching, and see you again next week. Bye.